Happy New Year, everybody. I'm back again for our first monthly market update for 2023. My name's Kevin from the Feeler Group in EXP, and we're going to take a look at what happened December 22 versus December 21, and then we're going to look at month by month what we're seeing in the market. Alright, so first things first. The average price of a home in December of 2022 was $559,000. That's down 2.7% from the same time last year. The sold to list ratio is at 96.5%. That's down 6.5%. The units sold, we saw 756 homes sell in December. That's down a bit over 30% from December 21. And the days on market is up 61% at 41.24 days. Next, we'll take a look at the total amount of inventory on the market, how many months that represents, and how many new listings hit the market in December. So the total inventory of condo and residential is 2,254 units. That's up almost 180% from December of 2021. The months of inventory is at 3.7. That's up 311% from the same time last year, but up 0.2% if you remember from the November numbers. And the new listings, we saw almost 700 new listings come in December this year. That's up almost 17% from the same time last year. But like always, taking a look at the year-over-year numbers does not really tell us where the market trend is going. So let's dive in and figure out what is really going on in the market. What are we going to see in the first couple months here of 2023? So as we know, the average price is down 2.5%. But if you take a look, it's been quite a wild ride that we saw in 2022. So the average price went from $575 in December of last year all the way up to $716 in the peak in March of 2022, and all the way back down to where we sit today at $559,000. So if you're wondering what your home is worth, well, it's worth pretty much what it was at the same time last year. But now let's take a look at the average price since the pandemic began. So taking a look at this graph, even though we have come down pretty hard since the peak of 2022, you can see that if you bought your home even just 3 years ago, you're still up about 30% in equity. You can also see by this graph that over the last couple of years, we've had a similar trend where January is when prices really started to pick up as the market started to heat up. Are we going to see the same thing this year? It's hard to say because we're in a very different place of inventory and the amount of homes selling, as well as interest rates. So next, let's take a look at the sold to ask ratio. So looking at the sold to ask ratio chart, it resembles a lot of the average price chart. We see the numbers come up high and then peak and then come down pretty hard. But between August and December, we see a small drop, but not too much. And next, let's take a look at the days on market. So while the average days on market was 25 in December of 21 and 41 in December of 22, let's take a look at the average days on market over the last 5 years. Now this graph shows a little bit of a different story. You can see that we have come up significantly over the last couple of years, but the average days on market in January of 2018 was actually 67 days on market. So where we sit today is just about in the middle between the average high and the average low of the last 5 years. And finally, on to the units sold. This is where we're seeing the biggest change in the market. This is what's causing the inventory to rise at such a rapid pace. We're seeing significantly less homes sell than 2021 and in the previous years as well. So here's the average units sold month by month for the past 5 years. And again, if we take out 2020, you can see that starting in May of this year, we started to see significantly less homes sell every single month. Now this is the metric that I'm going to be watching the closest, the units sold as well as the new listings by month. We see that the new listings by month increased by 16% year over year, where the sales actually went down 30%. This is where we're going to start to see a discrepancy of inventory continuing to rise. So why are so few homes selling right now? We all know it. It's the interest rates. Buyer demand has not gone away, but buyer ability to buy has significantly decreased. There are many people right now that want to buy a home but do not qualify at the current rates. So everyone was looking towards the Bank of Canada to see what they're going to do next. Their next bank announcement is on the 25th of January. We're waiting to see, are they going to raise rates again, or are they going to announce that they're going to keep them where they are? This is going to be a huge factor of what we're going to see happen in the real estate market in the next coming months. But I think we are going to continue to see lower sales until we start to see a bit more positivity coming from the Bank of Canada talking about the potential of lowering the rates. So where do I see prices going? I see them on the continual gradual decline like they have been. But where do I see them going in the future? I think as soon as the Bank of Canada stops raising the rates or does something like allows the amortization periods to be extended or maybe even gets rid of the stress test, we're gonna see buyers have the ability again to purchase, and we're gonna see them rush back to the market. When is this gonna happen? Only time will tell. But any questions that you guys have, wanna know about the market, put in your comments below. I'd love to make a video about the future. And like always, thanks again for watching. I'll see you next week.